I think we're in a consolidating plateau. The Bitcoin path is clear. The concept of bear market only makes sense if you have a short enough time horizon. The smarter part of the population is going to get richer. I think we're in a consolidating plateau. And I think it's a pretty good plateau because there are all these conventional mainstream investors and they've been watching Bitcoin. And when Bitcoin was going up too fast, when it was running parabolic, they're afraid to buy in. But right now, sitting in a plateau where they're a lot more likely to buy it, by the way, if the return was 5x the NASDAQ. We got some really great news this week. Miller came out and he announced that half of his personal net worth, half of his personal portfolio is invested in Bitcoin. And he said the other half was like an Amazon. He's held Amazon for 25 years or whatever. And, Amazon is famously volatile. It went through lots and lots of 80% downs and a 90% drawdown. And he's just been sitting forever. He's like a classic hodler. And Amazon's big tech. In essence, what he said was, I own digital gold and I own a big tech retailer, and that's half and half. Now, a year ago, he said, I have some, but he never said 50%. Yeah. Now you've got all the other mainstream investors that have some gold exposure, the Paul Tudor Jones and the Stanley Druckenmillers and the Ray Dalios and the fill in the blank. And they're all starting to wake up to this. And when they see Bill Miller, who's runs multiple billions of dollars and is a billionaire in his own right, saying, this is the only thing I can find that can go up by a factor of 10 to 50. That also is a store of value asset, right? And then they start to pay attention. Now, if Bitcoin was trading at an all-time high and it was like on fire, they'd be afraid. But you kind of like the idea that Bitcoin is 40% off the all-time high and it's catching its breath. And you think maybe this is an entry point. And in fact, I've seen lots of high net worth individuals and family offices that they're just now starting to do an allocation to Bitcoin. Like maybe we should allocate 5% or we should allocate 2.5%, and February they would have been, or March or April or May, they'd be afraid. And now they're through a lot of the risks. The China crackdown de-risked the situation. The consolidations de-risked the situation. Every single publicly traded miner, every miner that comes public de-risks the situation. All the political, the regulatory clarity de-risking the situation. And so I don't think we're in a bear market. I think Bitcoin it's moving through this phase where it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is the gold plateau, right? To basically digital gold replaces gold and flips gold, and that's like a 5,000. And then after that, it's really just a property index or a monetary index, which should be 10x that. So, what I see is a move from where we are to 500,000 over 3, 4, 5 years, and then a move over the following 3 to 5 years. It could take 10 years, but a move in the next epoch from the 500,000 to 5 million dollar range. Because ultimately, people say, what is Bitcoin? Well, Bitcoin is the apex property of the human race. It's the only property you can truly own. So the question is, who wants it? Well, everybody in the world with weaker property. So what is weaker property? Well, how about like a second house in Africa? Like, how about land in the middle of Africa or Asia or South America? How about a building? And fill in the blank. Would you rather own a building in Venezuela or Argentina? How about a ranch in Colombia? Like everywhere in the world where you have excess money and you want to invest in property. Problem with investing in a currency derivative is the currencies are collapsing, right? And they're collapsing at 10, 15% a year in the Western world, but they're collapsing at 40%, 50, 60% a year in the developing world. So bonds, they're weak property. Real estate is weak property because you've got a politician that can, they're going to tax it and they can take it away from you and you can't move it if you need to leave. And you can only rent it to people in the country. So, and then equities are weak property because the CEO controls that equity. It's a security. And if you own securities, the bank controls it. Let's say you own a security, you live in Zimbabwe. Well, the government of Zimbabwe can take it away from you. Try buying it at JP Morgan. They can take it away from you. The CEO can print more equity and they can take it away from you. A random government, in Australia can put fine on Google and they can take it away from you. A union can unionize, right? If you're holding securities, you've got lots of risk. If you're holding real estate, you've got lots of risk. If you're holding gold, well, the bankers can print more gold paper and the gold miners can mine more gold and try to move through an airport with $10 million of gold. Try to move through an airport with $1,000 of gold. I tried to move through an airport with a penknife that Amazon sold me, and it was labeled as TSA friendly. I couldn't get a knife that's like a quarter-inch or half-inch blade through a metal detector in an airport. So your property is all weak, all of it. And so how much is weak? Hundreds of trillions of dollars of weak property. So ultimately, I think that there are 8 billion people on the planet, or there shortly will be 8 billion people on the planet. And they're all going to want some amount of digital property instead of like that second Airbnb or that investment property or that equity. You know, what is my thesis for Bitcoin over the long term? My thesis is technology will advance. Everybody's smartphones are going to get more powerful. We're going to get to a world where eventually, you know, Google and Facebook and Apple, they're going to also support this digital property and digital currency. Twitter's going to spread. YouTube is going to spread. Knowledge is going to spread. And I suppose even 20 years from now, there'll probably be some kind of ignorant, you know, patriots that are ideologues that'll say, I reject all new things and I'm going to just do whatever I'm told. But it's going to get to be an increasingly small portion of the population, right? Like the point is they're going to lose their money. The money is going to move to the wise. The smarter part of the population is going to get richer. The wealth is going to transfer, and that's going to create a strong dynamic. The Bitcoin path is clear. We're not in the concept of bear market only makes sense if you have a short enough time horizon. Like if you're a trader and your time horizon is 12 weeks, you can have a bear market. But if you have a 10-year time horizon, then you really have to ask yourself, what is the technology trend and what is the cultural trend? And the technology trend is clear. We're moving toward everybody on Earth having a digital wallet that they can move digital assets around. That's clear. And cultural trend is people are globalizing. So again, like if you're sitting in the middle of the Serengeti and someone offers you the chance to buy $1 million worth of ranch land in a country where you don't trust the government, it used to be you didn't have a choice. 20 years ago, you had to take the local currency and you had to own the local land. But 20 years from now, you can use a foreign currency. The truth is just about everybody would switch to the dollar tomorrow if they could, and they would swap. No one's going to use the peso, the bolivar, the naira, the pound, whatever. They would all switch tomorrow if they had technology that was safe, if they could figure out how to do it. So we're globalizing. We're using language like English. We're globalizing our language. We're globalizing our currency. We're globalizing our property. It's moving on digital rails. That creates an advantage for the early adopters. There's going to be volatility. But, like if you bought Amazon stock 10 years ago, you could have bought it for $250 a share. People would have said you're stupid, And if you were holding Amazon stock 20 years ago, it traded down 90%, right? Well, the world's second richest or richest man was stupid enough not to sell when it traded down 90%, right? That's the key. When Facebook came public, the stock traded down 60% or something. It crashed, and Mark Zuckerberg didn't sell. And so, the real secret to success is you figure out the technology trend over a decade, over between 10 and 30 years, and then you just either make that asset or hold that asset. And you don't really obsess over short-term cycles because you outsmart yourself. You'll be that guy that, you'll be convinced we're in a bear cycle, you'll sell, and then all of a sudden some piece of news will come out, the price will double, and you'll never get back in. And it will, it's like it'll run away from you. I don't think anybody's smart enough to time the market.